If you do a harmonic analysis, which is if they grow at 30%, and the next year they grow at 15%, and the next year they grow at 7.5%, where is retail given the Amazon juggernaut in 5 years?
Well, I'll tell you, the Amazon bulls are telling you, retail sales is a low single-digit number, but what's happening here is the migration of sales from bricks and mortar to to online, and that is 8% of retail sales now go online. A lot of the bulls will tell you that's going to be, north of 10, 15% over the next 10 years. If that's the story, that is the top-line bull case for Amazon, and then Jeff Bezos can spend any amount of money he wants to get there.
Here's the chart. I want to talk about spending money. Here's a chart of Amazon. It's a trend that Paul Sweeney loves. Up, we go. I believe I have this right. He's going to develop an Amazon Prime fleet south of Louisville in the midst of northern Kentucky folks and spend more money than Mr. Trump would ever think of to create American full-time and part-time jobs. Is Jeff Bezos Donald Trump's best friend in terms of job creation?
Job creation, capital spending, you name it, he's everywhere. So, we've seen this before for the last 6, 7, 8 years for Amazon, spending tremendous amounts of money investing in the business to get logistics, fulfillment centers, everything you can think of to get really close to the consumer. Now he's getting into actual logistics, transportation, planes, ships, Pan-Pacific shipping. So, here's a company that's willing to invest because they recognize that the long-term revenue story for them is a great long-term growth story. So he's willing to put the money up now to get even closer to the customer. We'll see how that plays out.
Right, but are they right, Paul? And actually, so Amazon has always gone for market share, right? And they kind of think about the profits, not secondary, but they want to make sure that they're there so that you go to them first and then think about how to make them profit. When do investors start losing patience with that?
Well, it's interesting. Investors have generally been pretty well conditioned for the Amazon story to invest for the long term. If we think back just a couple of years to 2015, they actually dialed back the spending and started putting up some pretty significant profits. And as well as the cloud business really started to grow for them, and that is a profitable business. So in 2015 and even in the early parts of 2016, investors got a lot of profitability coming out of this company. What we've seen over the last couple of quarters, however, is they are dialing back up the expenditures, the investments across their business, and that's kind of what we're seeing in some of the guidance here. So this is a company that can dial it up and dial it back, but right now I think most investors are fairly comfortable with the long-term revenue growth story such that they're willing to give Jeff Bezos, again, the benefit of the doubt in terms of spending.
Yeah, Paul, I want to get to Snapchat in a second, but actually, does Amazon need to kill it in the grocery arena to actually become the unbeatable retail? Am I going to buy milk and my salad from them?
Potentially. I think, when you think about Amazon, they've gone, their product offerings have just expanded way more than anybody thought they would at the beginning here. So there is no category that I think that they are not thinking about and thinking about going in big.
Okay, help me here, Paul. And this is with our team at Bloomberg Intelligence. Apple Computer, I showed this chart at the opening of the hour. The basic idea here is here's services, iTunes, all the fees, all the $1, $2 fees. And this is a Gene Munster analysis from a year ago. I can't fathom what that's worth. Here's their cash. Okay, it's gross cash, not net cash. And this is what Apple's worth. Is that a fair sum of the parts analysis?
It's interesting. I think the tremendous amount of cash flow that this company throws off is what investors really love about it.
Last quarter, yeah.
It's just extraordinary. So the question is, what can they do with this cash? How can they reinvest it? Are they going to reinvest it in the business and come up with the next new thing above and beyond the phones to drive the growth story? If not, what do they do with the cash? Do they return that cash to shareholders in an aggressive way? I think that's what a lot of Apple shareholders are starting to think about right now.